What's up, guys? It's Mr. Fit to Flourish. Today's topic is zero DTE options. So, a lot of people in my Discord are trying to follow me and following my trades. And one thing I do is on Fridays, I do take part in zero DTE options. Now, during the weekday, the only options that you're able to trade is zero DTE, which means 0 days till the option expires, which means the option contract is expiring the same day. The only stock that you're able to trade that has that is going to be SPY typically. So a lot of the times SPX or SPY, the S&P 500 is going to have that 0 days to expiration option, which is extremely volatile. Which means that if you buy a contract for $100, it can go to like $20 in like a matter of seconds. So it's very, very volatile. So you have to be careful. But that $100 option can also go from $100 to $3,000 in a matter of seconds as well. Now, how do you take advantage of the leverage? Let's get right into it. So the only time that you should trade zero DTE options, so on a Friday, you're looking at a stock, and all stocks are zero DTE on Fridays. So let's take a look at you're trading on Friday, you're looking at a stock, and you want to do zero DTE options. A lot of people want to just gamble, okay? If you want to gamble, go to Las Vegas. Do not trade zero DTE options if you don't know how to trade options or if you don't know how to trade in general. You need to have a setup. Number one rule when you're trading zero DTE options, you need a setup. This is gonna give you success immediately. You need a setup, okay? Number one, you need a setup. So your setup could be, hey, I'm gonna get in after a VWAP crossover, meaning that my bar, when my bull bar crosses to the upside over VWAP, volume weighted average price, then I'm gonna get in on this trade and I'm gonna get calls. Okay, I'm gonna get zero DTE calls. Fine, do that. Or if I'm looking for puts and my bear bar crosses below VWAP, I'm gonna get puts. Fine. If I have a double top form and I break the neckline, I'm gonna get puts below that neckline. Fine. As long as you have a setup, you can trade zero DTE options. So number one rule for zero DTE options, you need to have a setup. The number two rule for zero DTE options, even with a setup, you need trend bars. What does that mean? That means that you need big bars with a lot of momentum. If you're trading non-trend bars, meaning small little bars that only go sideways, your option contract is going to get killed. Again, that $100 contract that you buy can go to $20 in a matter of seconds if the stock price doesn't move in the direction that you want it to. Number one, get a setup. Number two, make sure you're trading with momentum. You need trend bars, okay? So if we're looking for calls, you need to have some big green bars that are moving really quickly to the upside, okay, with your setup. Or if you're trying to get puts, you need some really big red bars that are moving with momentum downward with your setup. Those are literally, if you only use those two rules, you're gonna win. Okay, a lot of people are just like, oh, I think the stock's going down. Let me just get in on zero DTE, gamble, YOLO, Wall Street bets. That's why you're losing. So if you don't have a setup, number one, if you don't know how to read price action and you don't know what a momentum bar is, or you don't trade with momentum, you're losing. Okay, go look back at the trades, or go look at how you're thinking about zero DTE. That's the two biggest reasons you're losing immediately. All right, let's get into some more stuff. The only time you trade zero DTE stocks with momentum, with the setup, number three. Okay, number three is going to be with a quality stock with volume. Quality stock with volume. What's a quality stock? Any of our blue chips, Amazon, Meta. You could trade SPY. You could trade Microsoft, Apple. We can keep this going forever. Or a stock that's in play. What is an in play stock? In play stock is a stock that currently is being traded at high volume due to it being a hot sector. So things like AI and chips. So semiconductor plays as well. So Nvidia, AMD, Avgo, ARM. A lot of these stocks have high volume. What else has high volume? Their options. They're 0 day to expiration options. SMCI. Okay. When we're looking at Bitcoin or crypto, Coin, COIN, also MSTR, also Mara, MARA. I don't recommend Mara because it's more like a penny stock. It's like $17 or something. Don't trade that. But it has high volume. But anyways, um, options with high volume. Okay, so any of those options have high volume. Why do you want something with high volume? If you trade something with low volume, then when you're buying it for $100, then you try to sell it, go around and sell it. Well, someone else is not gonna pay that much for it. They might be like, "Oh, I'll pay $80 for it," and then you're like, "Oh no, let me try to sell it to someone else." But there's no one else to sell it to because there's no volume. But if you buy it for $100, the contract, and there's a lot of volume, then there's going to be someone else who wants to pay $101 for it. There's going to be someone else who wants to pay $102 for it. So you're going to have a lot of people that want to trade that stock or that option as well. It's a zero DTE option. There's going to be a lot of people who want to trade it as well. So therefore, your price that you pay for it is going to be equivalent, if not better, selling for that contract. You're probably going to get a better cost when you sell that option if there's more volume. Okay, but there's going to be too much of a spread, also known as the bid ask spread, if there's no volume on that option. So you need to make sure that the stock you're trading is a quality stock. So the stocks in my watch list that I recommend every single day are, let's go down the list: SPY, Netflix, Meta, Microsoft, Apple, AMD, Nvidia, SMCI, Avgo, ARM. Let's keep going, keep it going. We'll keep it there for now. I can't remember all the stocks, but anyways, if you don't have stocks, those are good. You want to keep 3 to 5 stocks that you watch every single day, and you know the options like the back of your hand. You know the options movement like the back of your hand. The last thing I want to leave you with is, when you're trading zero DTE options, you need to understand the cost of these options. So when the market opens, typically the cost of the options are going to be just as high as the previous day. But because of theta, which is a Greek, theta is the time decay. Theta is going to kill your option. It's a value that tells you how fast your option price is going to decrease. Your option contract is going to decrease. So when the market opens, the option contract is going to be worth a similar amount to what it was the day before. But because this is the last day that this option is available, this contract is available, the theta is going to kill your option contract price. So as time passes, so after the first 30 minutes of the market open, that contract price will decrease significantly. Okay, you need to understand this. Understand this, please, please, please understand this. After the first 30 minutes of market open, the contract price is going to decrease significantly. So if the stock is not moving in the first 30 minutes, which usually it doesn't on a Friday or on any day, you need to wait for a setup. Wait for your setup. Once your setup happens and you see momentum bars, you get in and you get out. Get in and get out extremely quickly with zero DTE options. Don't hold zero DTE options for more than 10, 15, 20 minutes. Do not do that. If you don't know exactly when the stock is going to move pretty quickly, and you need to know because you need to have a setup and you need momentum. You need to watch for momentum. If you don't have those two things and you don't know about those two things, don't trade zero DTE options. But I need you to understand that zero DTE options in the first 30 minutes, the first couple minutes, it's going to be a similar price to the day before. But after the first 30 minutes to an hour, that contract price is going to decrease significantly because of a Greek called theta. So that's all I have for you today in terms of options and zero DTE options. So 0 days to expiration. Again, that's an option contract that you buy and sell that expires the same day. Typically, this is used by day traders. So if you don't know about this stuff, these are some really good tips that'll set you on the right foot. Options are extremely volatile. 0 day to expiration options are way more volatile. It is not recommending to trade unless you know what you're doing and unless you've been trading for years. Okay, do not take these options. This is not financial advice, but I'm just trying to help someone out there who keeps losing money, who keeps gambling, who is goofy. So don't do it. Anyways, it's Mr. Fit to Flourish. Y'all have a good one. Thanks for tuning into the Fit to Flourish podcast, and I'm out.